Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Dr. Sadek Wahba. He is the author of Build, Investing in America's Infrastructure, chair of the WISC Steering Committee, Wilson Center Global Advisory Council member, and chairman and managing partner at I-Squared Capital. Dr. Wahba joins me to discuss the future of infrastructure, planning, funding, and actionable proposals and policy. Dr. Wahba, it is great to have you. As always, welcome back to Trade Talks.
Thank you very much for having me, Jill.
You got it. And given the increasing focus on sustainability, how significant do you see the role of green infrastructure investments in 2025? And can you provide examples where you foresee it having the biggest impact on innovation?
Well, I think in 2025, you're probably going to see a greater use of technology and innovation in the oil and gas sector. Why do I say that? Because President Trump, elect, has made it a point to invest in oil and gas production and exploration. And so in my view, you're going to see an emphasis on what we call CCS technology, carbon capture and sequestration technology, which I think is a good thing because it accompanies greater involvement in the oil and gas sector. When we talk about power plants, which we need, that are based on gas, you'll be able to combine that, hopefully, in many cases, with carbon sequestration. So I think that's a positive thing. You'll see that also alongside traditional investments in renewable energy. If you think about it today, 14+% of energy production or power generation comes from wind and solar. 10 years earlier, it was only 4%, and it's predicted to be over 40% by 2050. So that will continue to be over 25 and the coming years, a key element of investment.
Right. And based on the strategies outlined in Build, what are the top policy reforms or initiatives that you believe should be prioritized to enhance infrastructure investments in 2025? And how do you propose that these changes be implemented at a federal and a state level?
You very kindly mentioned the book, and I have in my last chapter a review of key policies that are implementable and actionable. And I'll just mention two. I think the first is, if you want to continue to invest in infrastructure in a smart way and incentivize capital to go into these sectors, you need to have an infrastructure bank, or as President Trump in his famous Chicago Economic Club discussion mentioned, a sovereign wealth fund that invests in strategic key investments. So one or the other, and we can debate that, needs to be there to be able to provide the support and the capital to make efficient investments, again, under commercial terms, but that I think is a very important element that I think will galvanize capital and encourage more investment in infrastructure. I think the second one is a more specific one, which is when you think about the policies that the Biden administration, both on a bipartisan basis and the Trump administration are looking to do, it's about reindustrialization in the United States. So that means onshoring, that means higher tariffs, that means the CHIPS Act, that means the IRA Act, and so on. All that is to bring in capital and manufacturing into the United States. One thing that was passed in the 1980s was a tax called FIRPTA, Foreign Investment in Real Property Act, which unfortunately picks up infrastructure wrongly, and it has severely discouraged foreign capital from investing in infrastructure. If Congress is able to remove that FIRPTA, you're going to see Canadian pension funds, Singaporean sovereign funds, and others investing much more significantly into US infrastructure.
Yeah, and you've been discussing this for a while. I've been following your work for years, and one of the pieces you wrote, integrating infrastructure in U.S. domestic and foreign policy, it's something that you've spoken on even then. So when you think about the integration of smart technologies and AI, what infrastructure areas do you think will benefit the most from these innovations by 2025? And how should investors prepare for the integration of these technologies in traditional infrastructure sectors? Because since you've been writing on this, these newer technologies also invite an element of national security as well.
Absolutely. Look, I think the delivery of infrastructure as a service is going to, over the coming years, is going to be a fundamental transformation in the way we deliver that infrastructure through the use of AI technology. We just spoke about green technology, right? So I'll give you one simple example. We're talking about carbon capture, carbon sequestration. We need to talk about the efficient use of energy. That is in homes, in residential, commercial areas, manufacturing plants. You have AI technology that has the ability to optimize the use of energy efficiency across the board. Those technologies existed, but there is massive improvement over the coming year or two that we're going to see in that sense. New York, I'll give you another example. We talk about transport. New York introduced a congestion charge. The congestion charge was introduced to be able to reduce traffic, but of course also to increase revenues. You should look at traffic prediction and management technologies. You now have AI, which has existed, but not to the level of sophistication that we're going to see over the coming years. There is the ability to be able to predict and manage traffic lights in a way that can reduce up to 40% idle time and traffic congestion. Public transport, the use of buses, optimizing the routes that you have for buses, how many buses should be on the roads, all that will be severely enhanced by the use of AI and will reduce waiting time for many people. All that, of course, as you talk about AI technology, brings in the risk of cyber attacks. So at the same time that we're investing in these technologies, we have to invest in cybersecurity protection, both at the IT level and the OT level. And by OT, I mean operational technology, which is the actual firmware that people use either for a power plant or for anything else. So this will be another area of investment, which I think will be absolutely critical.
And Dr. Wahba, you have focused a good part of the book on private involvement in public sector infrastructure plans. When you think about 2025, how do you see the dynamics of these partnerships evolving? Do you predict an increase in private sector involvement? It seems to be the path forward, even just by the virtue of public utilities being involved in many of these projects. How do you see public-private partnerships, or PPPs, how do you see them evolving in 2025 and sustainably for longer than that?
Yeah, I agree with what's implied in your question. There has to be a greater use, and in my view, there will be a greater use of public-private collaboration. If you look at what President Biden did, the president passed the infrastructure bill on a bipartisan basis, and in fairness, that was a huge success. I think the biggest challenge of that was that it was 100% paid and funded by taxpayers. And I think this had to be done because this was the only way in which you'll achieve that kind of bill. Because when you look at what we've invested in the US over the last 4 decades, we've invested less than 2% of our GDP in infrastructure. A country like China has invested over 8% of its GDP in infrastructure. So we had to do a major, major catch-up. Okay, what would infrastructure 2.0 look like? And I think President Trump has looked at involving the private sector, including in his first administration, heavily into the development of infrastructure. Today, you have deficits of over 6% of GDP. You have debt to GDP exceeding 120%, and that's not including indirect liabilities. So it's going to be very difficult, if not impossible, for the federal government to be able to invest in infrastructure the way it's done in the last infrastructure bill. We have Elon Musk that is expected to run the new department DOGE, which is looked to create efficiencies. What that means from an infrastructure perspective is pushing down a lot of the federal-based programs to the states. But the states really don't have the ability to either fund or manage these complex, large infrastructure projects. So that means that the private sector has to be involved in an efficient way to increase productivity, to increase size of investment. These will mean great economic growth. It will also mean greater employment and better productivity for all.
Yeah. I mean, that logically, it makes sense, and I agree there. But I think part of the frustration or challenge is the accountability and transparency of where these funds are being diverted and how they're being used. I mean, it's no secret that there is a lot of frustration when it comes to the infrastructure, at least the physical infrastructure in the US. So, Dr. Wahba, what specific barriers are preventing more private sector involvement, and what needs to change to happen for private investors to step up regardless of who holds political power and persuasion in DC?
The barriers are, at the end of the day, self-imposed and self-created. I mean by that over the last 70 years, we have, since I would say the Great Depression and by the end of World War II, US government effectively took over the entire running of our infrastructure. That was not the case before. In fact, water sectors, waste, everything was really roads was run by the private sector. So we need to go back and look at the right balance. There's no ideology here. We need to find the right solutions where you involve the private sector when it makes sense, you involve the public sector when it makes sense, and you involve both when we think it's optimal. I'll give you a simple example. Take airports. Over 40+% of the airports in Europe are privately run. Less than 5% of airports in the US are privately run. So why is that? That is because of regulation imposed by Congress over the years. So we need to be able to remove that. And I think that's an area where Doge and Elon Musk will be able to look at and to say, is this the right model that we need to have? What kind of regulation do we want to find and to develop? And can we remove those so that we're able to encourage investment into the right sectors and make it more productive?
What are some of the key risks the US faces if we continue to underspend on infrastructure, and how do these failures ripple through the economy?
Look, I think a failure to spend on infrastructure is not an option. As I told you, China invested over 8%, we invested less than 1%. So we need to be able to invest in infrastructure so that we can create efficient, resilient infrastructure. As I said, that means high economic growth. High economic growth comes with also higher productivity when you invest in the right sector, in the right way. My view is the use of technology, and that's one of the topics we talked about, over the coming years will make what has traditionally been a boring sector, which is infrastructure, in my view, will make it one of the most exciting sectors to invest in over the coming decade.
And you advocate for an infrastructure decade focused on long-term climate resilient investments, particularly in vulnerable areas like Florida and Louisiana. What would a decade-long approach look like, and why is it essential for addressing the climate crisis and safeguarding infrastructure in particular?
So I'm a Floridian, and I can tell you that some of the recent hurricanes that hit us made major damage to infrastructure. And the damage that was caused to infrastructure, unless you're talking about coastal areas, was not supposed to happen because these type of events are more like 1 in 500 years, and that frequency has increased. So you have frequency in events like hurricanes, you have frequency and greater volatility in temperatures across the board. So you have had some of the hottest days in ever recorded. So we need to be able to address these changes so that we can create resilient infrastructure. As a Floridian, if we want to continue to live where we are in many of the coastal areas, this is absolutely critical. We have to invest in not only resilient infrastructure, but we have to protect the environment that provides us a lot of key resources. A simple example, the Everglades provides 90% of water in South Florida. Unless we're able to preserve the Everglades from pollution, from industries, from agriculture, we are not going to have sufficient water, and there is no other way to get that water except for the Everglades. So it's a full cycle that we have to invest in. To be fair, the current administration in Florida, Governor DeSantis and others have invested massively in protecting the Everglades, in building infrastructure. But honestly, it's a constant battle because it costs a lot of money, and you have the fundamental question of who's going to pay for it. And you have to be able to fight against climate and fight against economic interests all the time. But that is something that we have to focus on because our survival in states like Florida is absolutely critical.
Yeah, it certainly is. And if we could take a peek behind the book for a moment here, creating a new infrastructure model, all these proposals make logistical sense, but every asset, every state, every jurisdiction, every policymaker has different ideas in terms of what this looks like. On a high level, how long should how long should this take place? What's the risk that's shared between private and public stakeholders? How can policymakers ensure that PPPs are effectively executed on? Is there any consensus there?
So I'll tell you, the good news is that we have been having these conversations for a long time. I can go back to congressional testimonials going back to 1993. In fact, Senator Mack at the time led a whole team reviewing that, and Senator Mack was a senator from Florida, and you can look it up on the congressional archives. The same topics that we're discussing today were discussed then. So I think we know what the solutions are. I think it's a question of having the leadership to be able to implement it. And I think the coming 4 years with the president, with the Congress, with a genuine attempt, hopefully, at reforming the way government undertakes these major projects, I think we have the right consensus. We have the right consensus also because we were able to spend $1.2 trillion in the current administration just to bring us back to where we ought to have been. So you have the work that was done in the last 4 years to reinvest in infrastructure. Now we have the opportunity to say, okay, we've done that. We're trying to improve and upgrade our infrastructure, maintain what we have. We now need to go to infrastructure 2.0, and I think we have all the elements to make it a success. We are the leader, without a doubt, globally in technology. The ability to marry that with traditional infrastructure is an extraordinary opportunity, both for investments as well as for the people, the users, to increase economic growth, to increase employment, to increase its productivity, and we can do it.
Yeah, I mean, we certainly need to, Dr. Wahba. I don't think it's a question of when, but if we have to. I mean, there's significant deterioration. There's lack of cohesive, strategy in terms of investment, and we're just doing emergency fixtures and band-aids now. I mean, that just can't be sustainable.
That's correct. And it can't be sustainable, and consumers know about that. So when you conduct surveys that ask people, are you willing to pay more for better infrastructure? The answer is a resounding yes. When people are asked, do you care if that infrastructure is being provided by government or by the private sector? The answer is a resounding, I don't care as long as someone provides it in an efficient way. So you have the willingness on the part of the consumers to pay more as long as they get a better product. You have the need from a budget perspective where at the state level, they will not be able to finance the massive push down that you're going to get from the federal government to the state government. You have that technology which is available, and we have a ticking bomb, which is climate change, that needs to be addressed if we want to continue to invest in infrastructure that is more and more resilient.
All right, Dr. Wahba, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq.
Thanks for having me.